A warm welcome to you, my dear children. Next chapter 3 in your unit 9, chapter 3. Bank account and bank reconciliation statement. In this session, as I told you in the previous session, children, in this session we are going to learn about dishonored checks, dishonouring of checks, dishonouring of deposited checks, dishonouring of issued checks. And with all that knowledge, we are going to prepare a bank account. We are going to record transactions in the bank account and in the relevant ledger accounts. All right. As you can see, children, here we have the topic today: dishonouring of deposited checks. You once told me, when we deal with checks, when we have a bank current account, and when we get the facility of checks, we get to deal with checks. We always use checks in order to make our payments, in order to pay. And we accept checks to receive money, to receive any amount that we are supposed to receive, that we are supposed to get. We can accept the amount through a check. Likewise, children, when we receive checks, I told you, sometimes we don't directly send the check to the bank then and there. No, we don't do that. When we receive checks, when we accept checks from our debtors, when our debtors, when they have to pay us money, sometimes they might pay with a check. We accept checks, no problem. Sometimes for cash sales, when we sell goods to our customers, most of the time our regular customers, when they say, Dalali, I'm check එකකින් ගෙවන්නද? I'm check එකක් දෙන්න. Yeah, it's normally something that happens in any business. When you get the payment by a check, you don't say no. You say, no, check ganna. Cash, only cash. You don't say that. You accept checks. Well, there are some businesses which do not accept checks, but it doesn't matter. Most of the time, when you are in business, you accept checks. Sometimes you directly deposit your checks in the bank account, which means when you get a check from a customer, you directly send the check to the bank, or you tell the customer to deposit the check directly in your account. In that case, children, the money goes directly to the bank or to the account. So the double entry is cash sales and cash sales done and the check directly deposited in the bank. Okay. Cash sales, sold goods. Okay, sold goods. And received cash? No, received a check. You didn't get the check and you didn't put the check in your cash drawer. You sent the check directly to the bank. Cash sales. And the check was directly deposited in the bank. In that case, debit the bank account, credit the sales account. Debit the bank account because your bank balance increases. Okay. Asset increases, debit. So debit the bank account, credit the sales account. Debit, credit. That is the double entry. But sometimes you don't send the check directly to the bank. You don't just ask the customer to go and deposit the check in my account. You don't ask, you don't request the customer to do so. You get the check from the customer and put it in your cash drawer. Get the check from the customer, keep it in your cash register, in your drawer. Lachui. That's what people call Modalali. They call Lachui. The cash is kept in a locker or drawer. Okay. And in that, you keep the check. Then the cash which received, which was paid to you by the customer, was added to your cash at hand. Then what is the double entry? Then the double entry is, children, cash debit, not bank account. Cash account debit, sales credit. You sold goods, received the check, didn't send it to the bank, kept it in your cash at hand. So cash debit, sales credit, debit credit. Okay. Further, when you go through other transactions, when you continue with your business, you get more and more checks like this. Likewise, you get more and more checks. You accept the checks and you keep the check in your cash drawer. And you deposit the checks maybe at the end of a week. Maybe all the checks you collect and at once. You deposit the checks at once. Send the checks to the bank, or you yourself take the checks to the bank. A bundle of checks at once to deposit. Okay. Now let's read out the text. When checks are received from cash sales, see, cash sales. Okay. Debtors. Debtors, etc. And when those checks are deposited in the bank, that's what I have been explaining to you. And when those checks are deposited in the bank, they are debited in the bank account of the business. Right? They are debited in the bank account of the business. I'll move to this side. Now can you see? Those checks are deposited in the bank. When they are deposited in the bank, they are debited to the bank account of the business. Okay. Bank account of the business, the checks are debited. Now, children, sales, the sale is already done, sales are already done, and checks are accepted. When you accept those checks, you debited the cash account because the checks you accepted and kept in the cash drawer. You didn't send the check directly to the bank. You didn't deposit the check directly. You accepted the check and kept the check in your cash drawer, which means added to cash at hand. Cash debit, sales credit. This double entry is already done. Okay. But when those checks are collected and sent to the bank at once for depositing, when those checks are sent to the bank for depositing, that's what here we are going to talk about. That's what they have explained here. Okay. When those checks are deposited in the bank, they are debited to the bank account. Then the depositing of checks should have another double entry. Depositing of checks should have another double entry. That double entry is bank account credit, cash account debit. All right? All right. You got the double entry, right? When the checks which were in your drawer, the checks which were added to the cash at hand, when you take those checks and deposit those checks in the bank, the double entry is cash account debit, bank account credit. Correct? No, not correct. It's wrong. Did somebody notice that? Did somebody say the correct entry? Yes? Who said that? Alright, if somebody realized the double entry, your double entry knowledge is good. It's not cash debit bank credit. It's bank debit cash credit. That is the double entry. When you deposit the checks which were in your cash, which were in your drawer, when you deposit those checks into the bank, in the bank account. Because the bank money increases, children, bank gets debited from the cash, because those amounts, those checks were taken out, cash decreases. So cash account credit. Alright, the double entry. Even after that double entry, even after you deposit these checks, this happens. This happens. What happens? This happens. Okay, the balance in the bank account is increased. However, now there, we are coming there. We were trying to come at this point. Now, however, when a check is dishonored by the bank, that's what I wanted to highlight here. What is the meaning of dishonor? Who knows? If you have any knowledge about dishonored checks or dishonoring checks, children, you can tell me now. Anyone? No? Well, I mentioned this earlier in the previous session, children. Dishonouring means the check is returned. Okay, the check is returned. Bank does not accept the check which you deposited, which you sent to the bank. Bank rejects it. It's returned. All right. Due to many reasons. It can happen due to various reasons. I'm not going to talk about the reasons. When a check is dishonored by the bank, in fact, the bank balance does not increase. Okay. Therefore, when a deposited check is dishonored, the debit entry made in the bank account of the business should be reversed. Should be reversed. Alright. Now that is what you should pay attention. That's what you should pay attention to. You should pay attention to what? This part. Okay. Right. There you go. When that thing happens, what thing? When that thing happens, what thing? When the deposited check is rejected, is not accepted by the bank, when it is returned, you call it dishonored. You call the check is dishonored. Right? The bank does not honor. Check is sent back. Okay. When that happens, it's dishonored. You have to reverse the debit entry which you made in the bank account. That's what it says. Because you, when you deposited the checks, the double entry which we did in a wrong manner, the double entry which we got wrong, then again I told you that the correct double entry. The correct double entry was bank account debit, cash book credit, bank debit, cash, credit. When you took the checks which were in your drawer, which were in your cash, when you took them and when you deposited them in the bank, debit, cash, credit, that debit entry must be reversed. It must be reversed. Okay, so the double entry should be this. What is the double entry, children? Double entry should be this. All right. Got it? Children, you first get a good look at the double entry. Bank account credit. The bank account credit. Why? The debit entry which you made in the bank account should be reversed. Reversed means it should be credited. Credited, right? So bank account credit, it should be credited, and the debtor's account should be debit. The person who gave you that check, if he was a debtor, you sold goods to a person called Loganathan. Okay, Loganathan. This Loganathan guy, you sold goods to him. He said, I'm taking the goods, but I'll pay you later. And you say, okay, no problem. Pay within 2 weeks. So it's a credit sale. And the guy comes in 2 weeks with a check. And he says, I brought you a check for that amount. I'm going to settle that debt, but by check. I will give you a check. Then you say, all right, okay, no problem. And you accept the check. The check was kept in your cash drawer, and later on you had the chance to send the check to the bank. You send the check through your assistant or whoever, a sales assistant or whoever who is in your business. You send the check to the bank. After you send the check, what did you do? The double entry that you recorded after you deposited the check in the bank. The double entry was bank debit, cash credit, the earlier double entry, the one that we discussed. Bank debit, cash credit, yeah. But when the check was sent after a few days, you get the check return notification. The bank has dishonored the check is returned. Check which was given by Loganathan. Alright. Originally, when Loganathan gave you or paid you with a check, the double entry was cash debit, because you took the check and you added to cash at hand. You took the check and you kept it in the cash drawer. So cash increased. Right? Cash increased. When you accepted the check from Loganathan. And the double entry was cash debit, Loganathan credit. Okay. Yeah. Then you sent the check to the bank through your assistant. The check was deposited. At that moment, the double entry was bank debit and cash credit. Okay. Now later on, you get the check returned. You get to know that the check is returned. Then what you do is you debit Loganathan or the debtor's account again, because his debt is not yet paid. He gave you a check and the check got returned. You debit his account again. And credit the bank account or the bank book. See, children? My dear students, I hope that these double entries are clear to you, because these are important. When you go and when you start recording in double entries in bank accounts and in cash books, and when you want to make the double entries in the ledger, these will be very important. Remember, debtors debit, bank credit. Okay. Example, a check was received from a debtor 8,000 and deposited in the bank, and that had been dishonored. In this case, children, the check received from debtor 8,000 was directly deposited in the bank, and it got rejected, dishonored. Got it? It got rejected or dishonored. The double entry to record this is what? Double entry is that, the same double entry. Debtor's account debit 8,000, bank account credit 8,000. Okay. Now, that's that. Dishonoring or return checks, dishonored checks or return checks, which you deposited in the bank. Now this is something else. Dishonoring of issued checks. Now that is something else. This is something else. This is something different. You have issued a check. You have paid somebody else. Not a check that you accepted from a debtor. A check that you issued has been dishonored. It's your fault now. Maybe it's not your fault, but something that you gave, a check that you gave, has been dishonored. Now let's see what the double entries are. Okay? All right, children, now this is a different scenario. Let's check it out, huh? It is already discussed that when checks are issued, the relevant expense account or other relevant account should be debited and the bank account should be credited. We learned this in the previous session. When you pay checks, when you write checks to parties, to people, such as your landlord, and when you issue checks, right, for payments, for making payments, such as your rent payment, when you issue checks to your landlord or to other parties for payments, those checks are credited to the bank account, right? Credited to the bank account. The double entry is payment or the expense account debit, bank account credit. Expense account debit, bank account credit. Okay, it is the double entry. Expense debit, bank credit. But when that check is returned, what's going to happen? That check which you gave for your landlord for the rent of the building, if that check is dishonored, what's going to happen? The landlord is going to come at your face saying that, you gave me a false check, this check is, and going to throw the check on your face. No. Hopefully that won't happen. When an issued check is returned, the payment is not done. You thought that you did the payment, but later on, when the check is returned, not to you, to the party which you gave the check to, they will call you and they will say, hello, this is your landlord, the check which you gave for the rent, the check was returned. I'm sorry, you have to pay again. You have to pay me again. Pay the rent, please. That payment was not done. It had not been done because the check was returned. In that case, children, when such an issued check is dishonored by the bank, entries that were originally recorded should be reversed. Again, you should reverse the entries that you made. Right? Like, how do you do that? You do that. Should be reversed. you do that in this way. See, in this manner. This is the double entries you need. Can you see? I'll move to this side. This is the double entries you need. You again debit the bank account, because when you made the payment, children, you remember, when you made the payment, you credited the bank account. You credited, because the bank money goes down, the bank balance decreases. So you credited the bank account. I hope you remember. Then you debited the expense account. You reverse this double entry. Debit the bank, credit the expense. Just reverse it, okay? Reverse it. Yeah. So, when an issued check is returned or dishonored. Moving on. Remember the double entries, children. These are the important things, okay? This is an example. A check issued by the business to creditor. Now you have issued a check to a creditor, all right? Not to your landlord, not for the rent. You have paid a creditor, a person that you are owing for purchases, for goods that you purchased. That person is given a check by you, okay? It's a 15,000 check. It is dishonored. So what, again, the creditor is gonna come at your face saying that you cheater, you gave me. No. Hopefully it won't happen, all right? But that check is returned, and now the creditor should be paid back. You should pay again, because he didn't get the money from the bank. It was dishonored. So the entry should be reversed. Bank account, debit. Creditor's account, credit. Yeah, I hope you got this. Children, moving on. We are going to do this question now. Get together with me and let's see how the transactions are recorded. If you can, do this in your books, because this exercise is an example exercise from your textbook. Okay, let's read out. Following transactions had taken place during the month of June. Month of June. That's a very pleasant time of the year, the month of June. Yeah. And these transactions has happened in the month of June. Yeah, these are the transactions. 2nd June, opened a bank account by depositing 22,000. Cash going out from your till or from your cash register, from cash at hand. Cash going out. Yeah. So cash decreases in cash at hand. Cash at hand decreases. Cash at hand decreases, which means cash credit. Cash credit. Bank account increases, bank money increases, bank debit. Cash credit, bank debit. Let's see. 22,000. Cash credit, bank debit. Cash credit, bank debit. Okay. Second transaction. We'll tick the transaction as we go. Okay. This is ticked. Received a check bearing number 455 from debtor. a debtor has one debtor, Loganathan or Karupusami or Sirisena or Harshajit or whoever, Jeremy or whatever the debtor. That guy has paid us, a debtor has paid us by a check. Received a check bearing number 455 from a debtor, rupees 9,000. Alright. Third, received a check, number 455. Okay. Received a check, which means the check was added to your cash till. Remember, the check was not directly sent to the bank. If the check was sent to the bank, it should be mentioned here, but it's not mentioned. So the check you accepted and you kept it in your cash till, cash drawer, which means cash increases, cash debit, asset increases, cash debit, debtor credit. Check did not go to the bank yet, so no bank transaction, no bank here in this transaction. Cash increased, cash debit, debtor decreased, debtor credit. Let's check that out, shall we? Number 455, remember the check number 455, okay? And 3rd June. 3rd June, cash debit. Here you go. $455, see, check number 455, check number. Cash debit, where is the debtor's account now? Cash debit, the debtor's account should be credit. Is it here? No. Let's check in the next. It's here. Debtor's account should be credit, 455. Check number is not mentioned. If you want, you can mention the check number. It's not important. Mentioning the check number is not important, but I just mentioned for your reference, okay? Okay. In the debtor's account, it's credited 9,000, and in the cash account, it's debited 9,000. Okay. Done. Next transaction, we'll tick. Deposited the check 455 that was received from the debtor. There. Now only you are depositing that check. Alright, got it. This check which was received 455, now it is deposited, children. Yeah, no big deal. I told you that. The check was not deposited. Now only it is deposited. This check is deposited now. See? It's deposited now. Got it? Yeah. Then it's 4th, children, the next day. 3rd, you received the check 455. Okay. 3rd, you received. And 4th, you deposited the check. What is the double entry now? You already recorded the receiving of check, which is this, when you received on 3rd the check from the debtor. How did you record that? You recorded it with a debit entry in the cash book, credit entry in the debtor's account. Debit the cash, credit the data. It's already recorded. Now what you do is you deposit that check. Now what you do is, the double entry should be debit the bank, because the bank balance increases. Check goes to the bank. Bank money increases. Debit the bank, credit the cash. Okay. Bank debit, cash credit. Let's check that out. Both accounts are here. We should have a debit entry in the bank account. Bank account. Here you go, debit entry. This is the debit entry. 455 check, 9,000. Debited and credited in the cash book. 455. Got it? Double entry is done. Yeah. Next transaction. Ticket, ticket, ticket. The check number 562, 12,000 rupees that was received for sales has been deposited at the same time. Now a check has been received, accepted, but without putting the check in the cash drawer, the check is directly deposited. Check is sent to the bank. Now that we are going to record that. Check number 562, okay, 12,000 received for sales and deposited at the same time. That is the important part. Deposited at the same time. Tell me the double entry now. Here's you. Who else? Am I to record all the transactions? Tell me. Come on, children. It's you who should record this. Tell me. Yes, that's good. Because the check directly goes to the bank, bank money increases, then bank debit, sales credit. The check is not from a debtor, it's from a cash sale. You sold goods and the customer paid with a check. You directly got a check and the check is sent. It was sent to the bank. Bank debit, sales credit. Okay? Debit credit. We'll take it and go see how the transaction is recorded. A transaction is debited to the bank. Where? Check number 562. It's here. This one. 12,000. Bank debit. Where is the sales account? Sales account is not here. Sales account is here. Sales credit. 12,000. Got it. Done. Next transaction. 12th. Deposited cash 15,000 in the bank current account. Now something else. Now that's something else. No check is involved. No. You didn't receive a check from anybody. You didn't deposit a check in the bank. You deposited cash. You took cash out of the cash till, went to the bank, deposited in the bank account. 15,000. Deposited cash 15,000 in the bank. Which means, children, cash goes out from the cash till, cash at hand decreases, and because the cash goes to the bank, bank money increases. Bank balance increases. Okay, this is the double entry, dual impact. Still I'm showing you this, the dual impacts even. I want you to understand, children, that's why. When you understand the dual impact, you can easily put the double entry. Cash decreases, cash credit. Bank increases, bank debit. Now it's a credit debit, no? Cash credit, bank debit. Let's check it out. 12th transaction. Cash credit. Here you go. Don't cut the entry. Draw underneath the entry. Cash credit 12,000. No, sorry, 15,000. 15,000. 15,000. Cash credit. Bank debit. Bank debit. 15,000. 15,000. Done. Ticket. Let's tick it. It's done. Next transaction. Next one. A creditor was paid by check. Check number 301. Check number 301. Amount is 7,600 rupees. 7,600. And discount of 400 was received. Discounts. Discounts, children. Discounts. We learned how discounts are made and discounts are recorded. Yes. No. Yes. We learned. A creditor was paid by check. Amounting, the amount is 7,600. Discount 400 was received. Which means after deducting 400, amount paid was 7,600. How to record this? A check, which means a check. Check. A check means a check. Bank. Money goes from the bank if you pay using a check. Okay. So, money at bank, cash at bank decreases. Debit or credit? Credit. Creditor also decreases. Creditor, debit. Cash at bank decreases. Bank, credit. I said decrease, credit. Okay. Liability decreases because the creditor is paid. Liability decreases, debit. Cash, credit. No, bank credit. Creditor, debit. Bank credit, creditor, debit. Let's check that out. Check number 301, 7,600. Remember to record the discount. Let's go and check our bank account. Bank account. Bank credit, right? There you go. This is the entry. The discount is recorded. See? And 7,600 is recorded here. Bank credit. And where's the creditor's account? Where's the creditor's account? Well, it's not here. It's in the next page. Creditor's account. Creditor's account debit. Creditor's account debit. 7,600. Where the discount? I almost forgot the discount. No, I didn't forget the discount. Remember to record the discount in both entries. If you forget even one entry, like let's say you forgot it here, you forgot it here, what's going to happen? The double entry is not complete. Marks deducted for the entry. Okay, so remember to record the discount in both entries. Likewise, we recorded here in the creditor's account and in the bank account too. Discount with the amount. Okay. Done. Ticket. Next transaction. Issued a check bearing number 302 for a payment of electricity bill. Issued a check 302, paid electricity bill. All right. And it's easy. Bank money or bank balance goes down because you paid. You paid with a check. Bank balance, bank money goes down. So bank credit. Payment account or expense account debit. Bank credit, electricity expenses debit. Bank. It's here. And the entry is recorded. Electricity expense 5,000. Credit side. Where the electricity account. Next page. Here you go. Electricity account. Debited 5,000. Electricity debit. Bank credit. Okay. You want more? We'll do some more. No problem. And we are done with that. Yeah. Next one. The check issued for payment of electricity bill has been dishonored. That's why I wanted to record the next one too. Dishonored checks. Now this is a check which was issued by you. You issued this check, right? You issued a check. You wrote a check with the amount 5,000 and signed it and issued the check to the electricity board to pay your electricity bill. It's dishonored. Check is returned. Yeah, you said it right. You have to reverse that entry. You have to reverse this entry. You have to reverse this entry. What is the entry? Bank was credited. Bank was credited. Yeah, bank was credited. Expense account was debited. Now you reverse. Bank debit, expense account credit. That's right. Let's go and see. This one. Electricity bill, the check issued for that has been dishonored. Bank debit. Here you go. This is the entry. Mention the check number 302 and the electricity bill account was on the next page. It's credited. See? It's credited. Yeah. Now it's as good as not paid. You got what I said? You got what I said? I said the electricity bill is as good as not paid. In other words, children, it's not paid electricity bill according to this account. See, 5,000 was debited and again it was credited. Huh? Yeah, which means it's zero. The debit 5,000 is gonna get cut off to the credit 5,000. That's how you reverse. That's how you reverse, because the bill was not paid, not actually paid. The check which was issued for the bill, electricity bill, was returned. So the bill is not paid. Got it? Reversing the entries. I hope you got the issuing of checks and dishonoring of issued checks. From this electricity transaction, issuing of checks and issued check when it gets dishonored. It's a bad thing, children. If a check gets dishonored, you have to even pay for dishonored checks. That is a tradition of banks. They get a payment. They charge a payment if a check is dishonored. Yeah. Next transaction. A check bearing number 415 was received from a debtor. A check bearing 415, number 415, was received from a debtor, 13,000. Okay. Received a check means we got a check, but we didn't deposit in the bank. Got the check, kept it in the cash drawer, which means cash increases with the check. Cash debit, debtor credit. Where is that? Here you go. Cash debit with the check number 415. See? 415. Cash debit, debtors account credit. 24th, debtors account is here. 24th, debtors account credited. Well, there's a slight mistake. There's a small mistake here. Debtors account is credited, saying bank, no, it should be cash. As a small printing mistake. Alright? No worries. Debtors account is credited, saying cash. It should be cash here. Description should be cash, because check was added to, the 13,000 check was added to cash till, and it was debited in the cash account. See, cash account debited here, 13,000, 415, 415 cash. All right, let's make it clear. Cash. Four, 1, 5. Okay. Yeah, so double entry is done. It's done. $415 deposited. No, not deposited. Now, in the next transaction, it is deposited. See, deposited the check 415 received from the debtor. Now, what should be done? This check, children, can you see this? This check, which was added to the cash book on 24th, now it should be deposited. Deposited means from the cash till, from the cash drawer, the check goes out. So the cash decreases. Cash credit, bank debit. Let's see, this 415 is credited in the cash book. Yes. Yes, here. 26th, check number 415. Got it? 415 is credited and debited in the bank account. 26th, 415 is debited in the bank account. Done. Deposited the check. Next transaction, we tick this and we tick this. Last 28th, one before last, 28th. Check number 415 has been dishonored. So the debtor who gave us a check, he gave a check and there was something wrong. This check, the check 415, which was received and deposited, it was dishonored. Now it is dishonored. What a shame, huh? Dishonored. Easy. What we do is, we debited the bank account. We credit the bank now. Reverse. Credit the bank account, debit the debtor again because the debtor's payment was not received. The debtor's payment was not received. Okay. Credit the bank, debit the debtor. 415. Let's go and check. Credit the bank. This entry is credited because the check was dishonored. Credit the bank. Go to the debtor's account. Yeah. Debit the debtor. 28th. Debit the debtor. 13,000. Here you go. Okay. Debit the debtor because the debtor now it's as good as he has not paid. This 13,000 is debited and it's gonna get cut off. Right, so that's that, children. That's that. Going back to the last transaction, this is done, and 29th is the last transaction. Check bearing number 632 was received from debtor, 5,700, 300 discount allowed, and this check was deposited in the same time. We'll wrap it up with the last transaction. Check received. So a check was received from a debtor. Double entry is cash debit, debtor credit. But wait, the check was not added to cash. It was directly sent to the bank. This check was deposited in the same time. So then, not cash, bank debit, debtor credit. 5,700 with a 300 discount. Don't forget the discount. Bank debit. 29th. Bank debit. 300 discount, 5,700 is the amount. Debtor credit. 29th. 5,700 with the discount, 300. Debtor credit. Alright, children. Likewise, we recorded all the transactions which are related to the bank and to the bank current account done through checks. Received checks, depositing checks, issuing checks, dishonoring checks, and furthermore with discounts. Discounts were done very clearly. We did it in a very detailed manner in one of the previous sessions. Children, the lesson is not over yet. More activities, more exercises should be done because practice makes you perfect. Alright? we did one example. No activities done yet. Next session we will do an activity. So hope to see you in the next session. Thanks for being with me, children. Thank you very much.